China's Bureau of Statistics reported this morning that inflation in June was zero. Now that's year on year. That is, there has been no change in consumer prices in China over the past 12 months. China is on the edge of deflation and appears to be stuck in what's called a liquidity trap, which is where interest rates and inflation are both so low nobody wants to invest or spend. It's also known as Japanification, after what happened to Japan after the 1990 property crash. Decades of stagnation. Investors took one look at China's zero inflation rate and sold some shares in iron ore producers and some retailers while they're at it. Education provider NextEd got a D- for a trading update essay. Chinese investors weren't troubled by the inflation data while stocks in New York fell a bit on Friday. Commodities mostly dropped today, but not very much, and the Australian dollar slipped a bit as well. Interesting chart in the Financial Review this morning of actual effective mortgage rates in various countries. Now, even though our official cash rate has gone up less than most countries, our average mortgage rates have gone up more, and we'll probably end up with the biggest average increase. And that's because most of our mortgages are variable rate or short fixed terms, whereas other countries have more longer term fixed rate mortgages, especially the United States with its cash rate above 5%, but it's way down the bottom of this chart because of its 30-year fixed rate mortgages. So the average rate being paid has barely moved. And finally, the extent of Antarctic sea ice is at a new record low this year, quite a bit lower than last year's previous record low. That's not finance yet, but it soon will be.